Good morning. This series is coming to you from Institute of Real Estate Education Development. My name is Major General Satish Sahijpal. I am an ex-army officer. I am going to be covering this issue of real estate investment trust in the form of a series. The first one that comes to you is what is REITs? Why has this come about? Why all of a sudden it is catching everybody's interest? As we go along, we'll be discussing the pros and cons of how REITs has come about globally and how it has been introduced in India and what is its likely future. REITs is an abbreviation for Real Estate Investment Trust. REITs is something through which public participation in the real estate investment has been going on globally since 1960. And by now, globally, there are about 1,000 or maybe more REITs companies. But in India, this has been introduced more recently. The first regulation for the REITs, the Real Estate Investment Trust, came about, was introduced in 2014 when the new government took over. And I believe the REITs and along with the REITs, there is one more investment trust that's been introduced in our country, that is the Infrastructure Investment Trust. We will be confining ourselves actually in this lecture series to Real Estate Investment Trust. Real estate is, as the name suggests, is a method of common man, general public participating in acquisition or part acquisition of the real estate projects in the country. Historically, real estate investment has been quite a popular form of investment. To answer the aspiration of the common man, the government of India then decided to introduce this bill to regulate it through SEBI, and in this marginal amount of money can be invested in the trust, and then the trust goes on to invest collective money in major real estate projects, which will, at the moment, what has been included in this entire exercise are the large office spaces where the MNCs come and set their offices up. In REITs, we take any amount of money, a small amount of money maybe, like for Mindspace, the cost of the REIT share is just 138 rupees. So somebody can actually come and participate in this REITs program with maybe as little as 1,000 rupees. And every 6 months, he starts getting the dividends and the return. It's a steady return, and these returns are governed again by SEBI. In case of REITs, that entire responsibility is of the REITs company, which is very strictly monitored by SEBI. And in REITs projects, at least 80% of the property has to be put on rent, so that it's a nearly completed project actually, which becomes part of REITs. When any of us want to enter REITs investment, we must understand that one, it's very closely regulated. Two, it's a long-term form of investment, and it is quite different from, the daily form of up and down, selling and buying kind of investment. And so with this knowledge, one should enter the REITs investment. It's more akin to the pension form of investment rather than stock market type of investment. This is as of this part of regulatory measures being ensured by the government. As the name suggests, and as we have discussed in our earlier interactions, it's the kind of investment that provides a steady income. It's more stable in nature, and the transaction is more regular in nature. It's not meant for people who are looking for aggressive investment, who are looking for quick returns, and who are actually opting to be the short-term investors. The broad portfolio diversification is what it provides. There are so many options of investment, as we are aware. There is fixed deposit, there is stock exchange, there is real estate, and many other forms of investment. But this is ideally suited for people who actually want to invest in real estate, but they don't have the kind of wealth required to buy high-stake real estate assets. It also saves the investor from being part of the real estate investment, but at the same time being saved of the hassles or the complication and complexities of documentation, of registration, and the long duration of the process in carrying out the interactions. So those are the kind of people actually, to sum the whole thing up, somebody who is looking to participate in the real estate investment. That's one. Second, who wants to have liquidity quickly liquidity, that is selling and buying of the assets is just at the click of a button. In the next part of this discussion, let's very quickly go over the kinds of real estate investment trusts that we have in our country. Globally, we have REITs in office space, retail space, industrial space, healthcare like hospitals, hospitality like hotels and resorts, and logistic hubs, maybe warehouses, are the kind of properties in which the REITs are actually opening up for their investments. Presently in our country, the existing real estate investment trusts are one is Embassy Office Space, Mindspace Business Parks, then Brookfield Real Estate Investments, and Nexus Select. They invest mainly in the retail sector. And the most recent addition to this list that we have just talked about is the Knowledge Realty, which has been launched from 6th August onwards. So it's a comparatively new REIT. The thing that I'd like to mention here is that all these REITs, that is Embassy, Mindspace, Brookfield, Nexus Select, and the Knowledge Realty, they are all backed by established real estate players in the country. Most of them are also backed financially by the investments of the investor companies from within the country and also some from outside. This is something which is becoming more and more popular, particularly in developing countries like India. It's something which has just begun, first thought of in 2007, and thereafter some regulations were formulated in 2014. The first REIT that was launched, that is Embassy, was in 2019, and since then there are now totaling at 5. It is anticipated that many more players, the builders, developers, and the investors are likely to come and form part of this, because this is a developing field and is also a developing economy. So there is more and more brighter future. Continuing with the evaluation of the REIT before taking the decision to invest money, actually it's the portfolios, the type of the properties that have been acquired by the respective REITs companies, the properties, their locations, the quantity, the amount of loan that a particular company has taken, the longevity, the long term, the duration of the investment, financial metrics, and occupying for the long term, long lease, the properties that have been acquired, or the portfolios that the company has acquired which are being offered, the lease rental that should be long term, and most of these properties, as has also been legislated by the regulations, they must have already been rented out. And in the past, therefore, the performance of the REITs, that must be studied and examined carefully before one takes a decision. Next aspect to be looked at while carrying out the evaluation is the equities and the debt structure of the company, the debt that raised, duration, the loans it has picked up, the loan conditions, the durations, bonds, and other instruments that it has relied upon for raising the capital, the equity, long term, and debt structure, how or what durations the debt has been raised, how much debt has been raised, which are very clear and distinct indicators of the financial health of the REITs. In spite of all the precautionary measures that the government has taken while laying down the regulations to safeguard the interest of the investor in the REITs, there are uncertainties actually that can come in the way of the performance of REITs. As is inevitable in the developing countries, there can be issues like slowing down of the economy that can affect and impact the value of the investment. Next is the lower rental rates. Initially, the companies may have leased out to good companies, but later on, actually, as the time goes by, because of various factors in the market, the slowing down of the renting process, actually, if that can get impacted adversely, that obviously have a very direct impact on the returns that will accrue to the investor. The other thing that keeps in mind is that these are very strictly regulated processes at the moment, and at every stage the government has made sure that the interest of the investor is kept in mind. So therefore, it's by far less risky or less chancy compared to the many other forms of investments in our country. So we would recommend people to come forward and participate in the real estate investment trust, because of keeping in mind all the pros and cons that we have discussed in in the series that we have gone through. And to conclude this series, we wish all the investors in the REITs the best of luck and happy hunting.